Good evening. This is the Elliott Wave update for the S&P 500 and the NASDAQ 100 for Wednesday, November 15th, 2023. I'm going to narrow my focus tonight, beginning here with the S&P, and I'm going to keep it down to the current rally phase. So I'm basically going from the October 27th low up to today's trading activity. And the primary reason is because I'm continuing to review the count up to this point, but I'm now backing it up even further. And just to see if there's a potential that some of the alternate counts that I've held to the side are not, in fact, what is being played out right now. And not to defend anything, but it's the market itself that begins to tell us what is actually afoot. Now, whether it is in agreement with how we feel about the fundamentals, how we feel about interest rates, how we feel about the economy, truly is not, we can't factor that in. We have to stick to the technical, and we've actually got to add those indicators, the technical indicators that are showing us market breadth, is showing us advanced decline, showing us the MACD, is showing us the different things about what's happening internally. You know, what is going on? What is the advanced decline? And it's been pretty stellar since we made that low on October the 27th. Now, granted that even in looking at the characteristics, the wave characteristics, we haven't invalidated the count that I was calling my preferred count, in that this whole move is nothing more than an intermediate wave 2. But what does not fit inside that intermediate wave 2 right now are those breadth numbers, the market breadth, the advanced decline, and how we're seeing it and how it has now continued. We saw that the Dow actually closed up 163, while the NASDAQ closed down, the S&P almost basically unchanged, and the Russell up very slightly. So we did see the correction started coming into the NASDAQ, as it should, because it's just been stellar. You know, these moves have been like get out of the pool type moves. But so the pullback was necessary. But again, what I'm talking about here is the internals, the market internals, and how by the way, I want to thank the subscribers, the people that are coming and they're leaving the comments, and they're also bringing in those market internals and giving that as evidence for their view of the market. And I must tell you that I truly appreciate that. And so instead of kind of going like, okay, well, I was short, now you're wrong, and this and that, we need to make adjustments to possibly what we're holding, what we want to do, and how this all will move forward. Now, back to what's going on. I've not tossed out, because actually the count that I had been using as my preferred count has not been invalidated yet. And in the S&P, it would not be invalidated until we crossed 4684 basis the December contract. So there's still plenty of upside room. But I switched and gave a different view of 1, 2, and then we're going up in a third, because of the strong breadth, the advanced decline, the internals, the market internals, and where this is all coming from. During a lot of the decline, there was a gross absence of macro traders. Traders and the funds or the asset managers, whomever, that they're coming in and they're trading the macroeconomic picture. Interest rates going down, interest rates going up, et cetera. They're positioning for that. But even as the market was moving itself lower, and we had all this talk about, well, is the Fed done? Is the Fed not done? We had that horrendous 30-year auction last week that basically just kind of put everything down yet again. So what was not present was the macro. Also, we also knew that there was like 5.2 or more trillion dollars sitting on the sidelines, waiting to be placed, waiting to be put into the market. Not necessarily that's all going to come into the equity markets. Some of it's going to go into the bond markets. Now, if rates are going to come down, people are going to want to lock in what's available right now for as long as they can get it. So we start to see the movement back into the bonds, the bond rallies. We start to see the movement back into stocks because the perception is the Fed is done hiking rates, that inflation will start to filter out and become under control. And the Fed, the analysts that are out there are beginning to talk about, well, the Fed will begin to decrease or just cut rates, possibly beginning in May or to July of 2024. Now, so if we're looking back at those macro traders, they're going to come in. They're not worried about what happens between now and then. They're getting ready. They're putting everything together. Plus add to this, folks, this all comes as we're moving into year end. So how do you want to position yourself to give that final report to all of your customers, all of the people that are giving their money to the funds? So all of that put together, there's been a big change. Now, could it be temporary? It just does not feel like it's going to be temporary. It feels like, well, number one, it could go all the way through to year end. So we get that year-end rally because, of course, that's what everybody's expecting. Now, put that together with everything else, and suddenly you're coming up with, or I'm coming up with, well, an intermediate wave 2 may not be the ticket. The fact that we're going to turn now and still head down in a primary C wave may not be the ticket. It doesn't mean that that's not going to happen. It is just actually the market where I am allowing the market to tell me at what time is that going to happen. Obviously, if it's now, the market's going to let me know. And how? Because it's going to start breaking above levels that will invalidate the count that I've had in place. So again, that intermediate wave 2 count would not become invalidated until wave 2 exceeds the beginning, the starting point of wave 1. And as I just said, in the S&P, that's 4684 basis the December contract. So with that in mind, I also know that a second wave can retrace nearly 100% of wave 1. It just can't exceed it. Now, that normally would just be showing strength, not necessarily. Not in the size that we're getting. If it was just Magnificent Seven, if it was just going through in being that it wasn't as broad-based as it is now. See, again, if we look at it, that yesterday, at one point, it was 17-1, by the way. 17-1, advanced decline. So on the New York Stock Exchange, there were 17 issues. For every 17 issues that were advancing, only one was declining. That's way more than the Magnificent Seven, folks. That's way more than just the big tech stocks. That's money coming back into the market, broad-based. That is what perks up my attention and goes like, oh, wait a minute. What's going on? Now, I know we're getting a lot of people that are going to come in and say, oh, you're wrong, you're this, you're that, blah, blah, blah. And it's like, no. The market is the one that dictates everything. And it's not that. So again, you could have asked, 2 weeks ago, would I be looking for the market to show up with 17-1 market breadth, advanced decline? I'd be like, no. I'd be looking for it in maybe into the Magnificent Seven, Mag 7 or the FANG index. But if we take all of that and we start to put those charts together, it begins to either you're going to let people know this is now turning into a stronger possibility than I had anticipated. So again, I'm presenting it as if we are going to go up and likely make a new all-time high. We're not that far away from it, to be honest with you. But if it stops short, so let me just quickly review. And again, I'm not holding on to it. The market is ultimately going to tell us. But I would be doing an injustice to the larger picture if I didn't say, okay, if it is an intermediate wave 2, right? Then this could be 1, 2, 3, 4, 5, minor wave A, ABC, minor wave B, 1, 2, 3, 4, 5. Then we have minor wave C and a completion of an intermediate wave 2. So the next legs up are going to be important in helping us to determine actually what is going on. Because there's just as much out there that can flip this whole thing around as there is that, okay, macro traders, are you going to continue, or just investors or whomever, are you going to continue to come in and push this market? Are you going to continue to, because you're buying on the narrative that the Fed is done hiking rates? Now, we got to pull back today, but it truly was just in the extremely overvalued NASDAQ stocks, and quite frankly, NVIDIA. Which, by the way, overnight was again in Globex above $500. But then they started hitting it. But what did they move into? Well, they moved into Netflix. What else? They moved into Apple. They drove Apple up, but then they backed out of it. But it was the Dow stocks that really caught fire today. Caterpillar, Disney, not Apple, not Microsoft. Microsoft was down a little bit. Meta was down. NVIDIA was down. Tesla caught fire today. So again, it's kind of where things are kind of popping up. The Russell held strength today. The Russell backed off because it also needed to do. So the possibilities are existing across the board. Let's start with the S&P and just get a feel for where we are. And let's keep it. I'm trying to keep it on a very short leash, so to speak. And I'm sorry that I know there's many people, you're listening to what I'm saying, and you're putting on positions for yourself based on what the longer term count may or may not be. And I get that. But all I can tell you, and to the naysayers and the people that want to say I'm always wrong, that's not true. And we know that. But I do not recommend trades. I do not recommend trades. And I have specifically stated that I switched from being a position trader to being a day trader. But as a position trader, I will just encourage people, you always hedge your positions and you have a stop. There's got to be a limit to what you're willing to risk. And if there isn't, then, I don't know what to say. Back to the S&P. So what I've gotten done so far, we had a 1, 2, 3, 4, 5. I'm labeling that minor wave 1. And then if it is a minor fifth wave up, which it could very well be, to complete the intermediate C wave, to complete the primary B wave. That's the possibility I got going on. Or it actually could be something else. And that part I've not actually worked out, and I'm not going to be delivering it, but is another alternate count that I've always had, but I've left it as an alternate because I didn't feel that it was possible, but it was there. Okay, so what I'm working on what I'm working off of, is that this is a minor fifth wave up to complete intermediate wave C, primary wave B. So this larger decline is still out there. Now, that in and of itself can change. And I've got to let this play out. I've got to let this go. So that's why I'm just going to focus on this. And there's plenty of things to trade. Just don't get stuck in the position. So here we are. minute one, minute two, we're in minute three of the minor fifth wave. So what do you have? Minuet 1, 2, we finished 3 today, and we started to pull back. Exactly what was expected, but it only got to 0.236. That's pretty, not very deep. Most common, 382. So we're looking at 44.90, and then what do we have? Right underneath it, we've got the 50s. We got the SMA, and we've got the EMA, which is now back on there. I'll take them off again. But somehow I lost all my moving averages, and I've got a custom set put together for moving averages, so put them all back on. And that is also resting right at 44.90. So I'd be looking for it to really come back down there. So, but once we got that fourth wave done, whether this did it here or whether we get a little bit more, down to 44.90, even possibility 44.74, really would not be looking for 6.8. That's a little bit much for a fourth wave and starts to really put this whole thing into jeopardy. So I'm not necessarily looking for that. But for 44.90, yes. But then I am still expecting an additional leg up in the form of a minuet, wave 5, to finish the minute wave 3. After that, minute wave 4, and then a minute fifth wave. That's all to finish what I'm calling a possibility of a minor wave 5. So what are we looking at? Well, right here, I got 100% for, here's the minute third. That's 46.36. That would be a minimum because, right, when remembering wave 3, normally the longest and the strongest. So therefore, I'm also going to be looking for a little bit more because that's only where it would equal wave 1, not turn into be the longest stock. So a little bit more possibly. But what else do we have above 46.35? We have on the outside, we have a couple of levels. 45.84 would be for the minor fifth wave. Actually, would be for the minor third wave. This is a minor, what am I writing here? Minor 2, we're in a minor 3. Well, I'm saying minor 4. So that would be a 618 where the fifth wave, and I'd have to redo that. But it should be some resistance at 45.84. And then we have this one for the minute, more important, 46.36. Sticking with the minute, if we surpass that, another day where they just come in with size and our advanced decline just rockets, then we got a chance it's going to keep going. And once I get this fourth wave in and done, I will be able to run one more fib to fill in these blanks to see where we can end up. And hopefully we start lining up around here and a little bit above. If I had to do it against exactly what we've done, then I am going to be putting them up as such. And that to there, and then run it over to the low, which I think, right there. You can see, yep. If 4409 completed our little small fourth wave, then wave 5 would be 100% at 45.92, just above the 618 at 45.84. But I got this one for the minute, and that brings up 1.618 at 46.42. So the cluster is higher, and it's wrapped around 46.35 to 46.45. And to complete just the minute third, then we have more possibilities. So here, even if this fifth, we got 100% of 48.70, that's new highs. So there's still a lot to really unfold. Now, staying within this, if this is an intermediate wave 2, then we got 1, 2, or A, B, And we have 1, 2, 3, 4, 5. We'd be ending up here, which is below. Even if we rock it in this wave 5, 2.618 is 47.23, still below that all-time high as it stands right now. And if we get and here's going to be the kick. We'll know if it is, again, I'm going to tell you, and this is what I look for. If we're finishing an intermediate wave 2, and we're going to drop into an intermediate third wave, what you are looking for is an instantaneous rejection of those highs, that whole level where the highs come in, and an immediate drop in 5 waves on the hourly chart. So that means it's like it just goes, it rejects that price level and it just starts to drop back, and basically would then violate any further rally by breaking levels that would not be consistent with an ongoing larger 5-wave structure. All right, so that's setting the stage. Now, again, it's not me, it's the market. I'm interpreting this, what the market is doing. Not what I'm hoping for. So that would be the S&P. Our moving averages are continuing to look good, even with this little pullback that we've gotten so far. And actually, it was about, 35, 38 points. So maybe we need a little bit more. So we did get up to 45, 41, and that was on the PPI. And that PPI level, that high, was immediately rejected. Immediately rejected. And it's not because the PPI was like super stellar, but all that energy was actually given to the CPI. So the PPI coming out pretty much in line, like, okay, we'll do a little buying. And that was it. Now we need to pull back because the market really was just a little bit overcooked. So I am still, no matter what, I would look for an additional rally likely to reach the 4,600 level or above. Under any count, 4,600 or above. Over in the NASDAQ. Let me just kind of open this up because I just want to do it. I'm doing the exact same thing. I'm only really looking at this rally. And again, if we are looking at it as an intermediate wave 2, then this is 1, 2, 3, 5, minor A, ABC, minor B, 1, 2, 1, 2, 3, 4, 5. I probably can put the third here, so I should actually fill these in. Right now, we would put minuet 1, 2, ding, 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 3, 4, 5. I think this is the end of the third wave. 1, 2, 3, 4, 5. Yeah. End of the third. We're also in a little fourth, but here we did reach 382. In fact, we came down, looking like an ABC down, started to rally, and I thought, oh, good. Now we're getting back into that rally. We should start heading for 16,000. No, stopped and came back and finished at the low. So I'm like, okay. So is it going to be an ABC, ABC? Let's go down to the 15-minute so that we can actually see some internals in here. So here it is. A, B, C. A, B, come back up to there, put a flat C in. So that's a wave B. And then we come back down in a C wave. And maybe we get back down to 26 or back down to 57, 757. And still be within the confines of a fourth wave. Or is this ABC 4? And that's 1 and 2. It came down and equaled it. It didn't break it. So, it's going to be interesting because these are our possibilities. If we continue to go down without going up, then I'm going to have to say this was ABC A, B, 1, 2, 3, 4, 5, C. That's also a possibility. And this is on the 15-minute chart, and I could take it up to the hourly, and it really should show us the same thing. A, B, C, A, and then call it 4. 1, 2, go up. A, B, C. So it shouldn't go much further. If it does, 1, 2, A, B, C, A, B, 1, 2, 3, 4, 5. get us back down to there. And I could do that overnight. So again, but the larger count continues to suggest that this is only 1, 2, that's the 3, this is a 4. We have one more, and we should exceed 16,049. Next up, we have 786 at 16,081. Now, what's the number here on the NASDAQ? 16,251, 16,252. If the market exceeds 16,252, intermediate wave 2 is off the table, because wave 2 would have violated and exceeded the starting point of wave 1. And we're into what happened at the end of October was a minor fourth wave. And we still have, so these are, I'm ranking, I'm putting into where my alternate counts are going to be. The one that would show that it was a minor fourth wave at the end of October, and we're in a minor fifth wave up, and that would be then to complete the primary B wave. Now, if the breadth of the market continues to just accelerate and kick butt, and we continue to see an inflow of funds into our markets, and that would be the bonds and equities. If we continue to see the dollar reverse, start to head lower, that is all going to be supportive of this market just marching itself up to new all-time highs. Now, whether that's actually going to be supported in the longer term, obviously, probably not. We're not out of the woods. There's still a lot of trouble. There's still a lot of hot spots. There's still a lot of geopolitical situations. There's still a lot happening within our own country. Yep, we're not going to shut down on Friday, by the way, because you all heard that in the news. So, but is it the best deal? Who knows? Does it make the government okay? Not by a long shot. So, once again, here we are. We take it day by day. So, under the count that that's a minor fifth wave, minute 1, minute 2, looking for, we got 1, 2, 3, 4, one more to put 5. We're finishing minute 3. Then we get a minute 4, and then we go back up again. Now, what do we got? Well, for the minute 3, we do have 16,485. That, if it gets up that far, folks, kicks out that intermediate wave 2. So we're that close. You know, if we get a fifth wave and it truly exceeds right there, 16,252, we are, I think it is. Let me just double check before I start saying things that maybe I'm wrong on. Yeah, 250, 16,250. Is it even lower? Yeah, 16,203 according to this. That's the level. So it's actually a little bit below. That's the level that this cannot, because if this is wave 1 and this is wave 2, first thing we know, we're going to have to argue out the whole diagonal triangle again. So we're not even going to go there. Please don't comment on it. So, but again, that's what would take out that intermediate wave 2, knock it right out of the pool. And then we're on to the would become the preferred, would be that it is primary wave B is not complete. Intermediate wave C is extending. And that entire drop that we've got from the July high to the October low was a minor fourth wave. That is an option. The balance, additional ones that I'm looking at, I'll go even to a higher level, which could be a possibility. I'm just not comfortable with it yet. So I'm still kind of tossing it around, because you know what? Once you put it out there, once you publish it, it's fair game. So right now, what I'm looking for, well, I got a minute 1, I got a minute 2, or a minor wave A and a minor wave B and a minor C wave. And this is 1, 2, 3, 4, 5 to hold below. I'm going to say, let's say 16,200, hold below. And then once I can get a fourth wave in, then I can put in, and I'm telling you, it's just is not going to line up. Even if we think that today's low, put in that little fourth wave, Okay, let's just do it because look at the size. That's a pretty big. So what do we have? Ah, right on it. 100% is right at those highs. Right at those highs. So yeah, it's real shaky because again, if indeed that ended the 4, then a 5 would be equal to 1, which is the most common at 16,221. 618 is way down here at 16,064. So more in line with the 786. So yeah, things are still on the table and they're still possible. But that's number one, considering that did complete the way down deeper. We're going to use the same method, but it's going to come in lower and keep those possibilities alive even more. All right. So moving averages still all pointing in favor of the market continuing. We're already looking at a count that's telling us we need at least one more leg up, and that could be either to complete the move or it's just going to complete minute wave 3, and we're looking for 5 minute waves. So it completes 3, we do a 4, we do a 5, and then that likely would then we can put a minor 5 up there or something different. So again, watching market internals, working this as best I can, keeping it on a very short leash right now. All right, next update will be on Thursday, November the 16th. Let me just double check before I get out of here. Tomorrow, what do we got? We got initial jobless claims, import price index, Philly Fed manufacturing, Cleveland President Loretta Meester, she speaks. So yeah, well, we'll look at that. But the first group come out at 8:30 a.m. Eastern. And then at 9:15, we have industrial production capitalization, utilization, and 10 a.m. home builder confidence. And the rest is every Fed governor on the board is out there talking tomorrow as well. So lots of things for the market to chew on. And our next update will be Thursday.